let's just brief people with what Fin Summit is about. So, people who are new here, this channel is all about finance. Uh, Fin Summit, here on the channel, you can always have research and stuff about finance. But Fin Summit as an event, which happens almost every year, sometimes twice, and this time to be happening in Dubai in the second week of November, is an event, a live event where all business minded people, entrepreneurs, traders, hedge fund managers, almost every financial head, as I should say, comes together, have a vacation like event discussing their ideas, their future outlooks, their projects together, and sometimes even form partnerships as they like. So it's a great event, Fin Summit. You can check on the website, you can follow through the bio, book yourself a spot if you haven't yet. You can part pay and choose your spot because we're running low. So yeah, that's it. Tone, what do you? I mean, I know that you've always hated the space about shitcoins, and rightfully so because you've seen the centralized stuff. Another coin just got hacked, and now everything is dumping. What do you have to say on that before we start with the traditional finance?
Can you be more specific? I
Yeah,
have
so
not.
it's just
Paid attention
I
to
think
this at
this
all.
news just dropped right now. I don't have a tweet on it yet, but CRV is a token that got hacked, and some 32 million coins just got hacked by somebody, and great conspiracy. The founder has margins on it, and the amount of coins that are being hacked, if he actually pulls that in the market, the owner himself get liquidated. So uh, everything in shitcoins dumping kind of. So
Wait, so
as usual,
it's called CRM? What did it stand for? Let's see. I'm on Twitter now. Let's see. There's a tweet from 6 hours ago that's like CRM is following me a bull flag or something. Is that the token that got scammed?
sorry, it's CRV, I guess.
CRV, thank you. There's too many shitcoins. CRV, let's see. Oh yeah. There it goes. Yep. I've never heard of this thing. I'm sure it was irrelevant to begin with. So other shitcoins are dumping as well. Let me go to CoinMarketCap and check this out. Yeah, not surprising. Is this why Bitcoin dropped like $200 as well? Which is weird, right? Because Bitcoin should be rising. So these are last 7 days. Price of Bitcoin right now is, yeah, Bitcoin dropped in the last few hours. That's not good, but I haven't really been all that high on Bitcoin lately. Bitcoin this morning, we were around 29,400, and right now dropped a bit. Interesting. Yeah, I don't really care about shitcoins, and as time passes, everyone is going to care less and less about them. Even Ethereum, it's very possible that in aggregate, the market cap across all of these shitcoins is not going to be all that low. It could stay steady. It could even rise. But what's most important is that Bitcoin will start to separate against each of these shitcoins individually. Even Ethereum, like Ethereum will not reach a new high versus Bitcoin when denominated in Bitcoin. It's just not going to happen. So, and all we will see is Bitcoin separating from each of them individually. But because you can have a billion shitcoins in aggregate, they can continue to grow against Bitcoin, and this is why using that metric of Bitcoin dominance is not all that useful.
That makes sense, but I think in my personal opinion, I'm kind of dubious here, because some people would say that the people who are half bred in crypto, like they don't really know what really how Bitcoin is separate to crypto, will just think that this whole industry is scam, and this another thing just proves it, and they might just rebalance their portfolios again for their clients. On the same time, some people might realize that Bitcoin is the actual one that is decentralized and everything else is shit, and this again proves it. So I personally would be bullish on this news, but I don't know how the market reacts to it later on. Let's see. But since we are on this BTC already, I just want to share this with you. I've put in the nest that BTC volatility in this regression shows that how this volatility curve has been going down over every halving cycle. And this one is actually down almost 300%. So, as you know, I've already told the audience here already that I'm doing a master's in wealth management here in London. And every time that I've talked about how crypto could be, in a way, can replace the fiat currency, and it has that value, that it has that possibility, but everybody says that it doesn't really compete to the fiat because of the stability. And I always counter them that the stability, every new asset takes their time to be stable. Do you think that this is that move towards stability, or is this just the law of diminishing returns? What do you think about this?
No, 100%. Before I answer, I want to give a few shout outs. Welcome, Mel, organizer of the Unconfiscatable Conference coming up. TC and One Gold. Welcome, guys. Good to see friends in here listening. Bernoulli, I see you in here as well. Thanks for joining. Am I not following you? That's weird. Did you change your handle or something? Okay. Assuming it's the right Bernoulli. Hope I didn't just follow a scammer. Okay. So Bitcoin's volatility is going to drop over time because the price of Bitcoin is going to go higher. It's one of the things. Oh. That was just weird what just happened. Okay. So the volatility of Bitcoin is expected to come down. One of the reasons it will come down is because the price of Bitcoin is going to rise. And as the price of Bitcoin rises, it becomes harder and harder to move the price of Bitcoin. It's a lot harder to move the price of a large cap stock as it is to move the price of, say, a penny stock. Therefore, volatility of Bitcoin will come down. And also, as more and more people get Bitcoin, as more people around the world have Bitcoin, its volatility is going to come down. But it will still take another 4 to 8 years before people will no longer use volatility as an excuse as to why they refuse to hold Bitcoin.
That actually makes sense. Before we continue, guys, this is an open space. Anybody who has anything in their mind to talk about finance can just raise their hand, come up on the space, or just comment down below to the right of your bottom of the screen. Anyway, the same theory that you mentioned here, we have another thing that I've posted in the nest where we see that this cycle, this bear cycle, is the shortest one for the miners capitulation we have seen so far. Another thing that proves a stability point, but as you say, yes, another 2 to 8 years, whatever we see coming forward. Anyway, I think that's enough for Bitcoin for now. Let's go back to the traditional markets. So here we have this. Sorry. Yeah. So there's this PEG ratio where we see that this time the tech sector is seeing the price to earnings and to growth ratio moving towards the highest, and this actually is on the same level of what we saw in the tech bubble. And we have numerously have been talked about this, how the combination of the 7 tech stocks is actually driving everything. So do you think this could be another situation like the tech stocks we've seen earlier, or it's just some data that should be ignored. It's in the nest.
Yeah, I saw charts like that. There was a chart that showed these, kind of crazy chart of expectations and like projected PE ratios and stuff, similar to the numbers. Oh, I'm on. You mind muting? I'm getting some cross feedback here. Thank you. Similar to the valuations during the tech bubble. This is not the same thing to me. To me, this is very, very different because 25 years ago, when this was in the late 90s, the internet was brand new. No one really understood these companies. Everyone was just on the hype train. That's not what's happening right now. People are not confused about Tesla. People are not confused about NVIDIA. People are not confused about Apple. No one is confused about the technology. No one is randomly throwing money at these companies. We completely understand this technology. And it's very, very easy for people to comprehend AI and what AI is basically going to be doing. And right now, a lot of people are starting to utilize AI as well. It is not as foreign to us as the internet was, and the imaginations were kind of running wild with the internet, what it can be. And people were way ahead of its time. We're not really ahead of its time. When people are thinking about AI, a lot of people are they're very realistic about it. No one is really all that scared of it. Some people don't think it's going to amount to much. I think it's going to be very, very useful. I'm still waiting for it to be, a little bit more user friendly. I would love to do all my graphic design with AI and many other things. And that's going to help the tech companies. But the tech companies that are driving this bus of evaluations, they're not even the AI companies, which is the latest in technological innovation that we have these days. These are your traditional companies that people fully understand. So I don't see this as a big deal. I think the market will continue to go higher, and maybe some of these big boys will slow down and catch up, and maybe they'll consolidate for a while. I don't see these companies crashing, and that's the difference. Maybe Apple will stop rising. Maybe it'll just flatten out for 3 years. NVIDIA, maybe it'll like pull back a bit and then go back up, kind of like what Tesla did. But I don't think people are confused and with wild imaginations here. I'm okay with these valuations.
I'm sorry. I mean, I understand your point that how this might just take a correction, but this chart actually shows that how the price to earnings ratio, a metric that actually a lot of it's actually industry standard metric, in terms of how the earnings growth has been going up. This happened. This trend that they saw, that the price to earnings ratio, in respect to the growth ratio, earnings to growth in the earnings ratio, is going like bonkers, like literally 70x, 80x. In terms of valuation, do you think this is a right trajectory? And if a person, let's say, now that they rebalance their portfolios, should they be a bit cautious, or do you think that with this new AI aspect and how people actually do use the new technology and are aware of it, and it's not just a new thing in the market, should it be the new normal? I'm sorry. Was Am I audible here?
Sorry, I was muted. Because I was looking at the chart, didn't realize I was muted. If we're looking at that chart that's pinned up in the nest, yes, the markets did crash from 2000 to 2001, but look how crazy those valuations got during the actual recession. And what happened after the recession? Well, market, maybe not the NASDAQ, but the overall market, and even the NASDAQ, I mean, it was recovering. Markets were rising from 2002 all the way to 2009 as these valuations became more and more realistic. But as they were becoming realistic, the market was consolidating and slightly rising. I don't really see this as a big concern. The ratios will even out, and that doesn't mean that the market is going to crash. It just means that people are going to be more realistic on these projections. The price to earnings ratio, the ratio could also rise. the earnings could rise. Companies could start paying out, could start creating better earnings. The price of those companies could remain steady. I don't pay too much attention to this. And the other thing that people have to realize is these projections, these price to earnings ratios, and these projections. Well, let's just be specific on the price. No one is investing in Nvidia and selling it next week. Only like people that are in this space potentially are, but the big boys, they're buying in and they're holding it for years and years and years. They're not buying Nvidia and Tesla based on the earnings, based on the next earnings call or next year's earnings call. They're buying it based on their own projection of what the earnings call 5 years from now is going to sound like. And that's why these PE ratios get a little out of control sometimes when the price of a company is so high, because it's a projection. It's what people think about the future, and that's still what dominates investing and speculation and trade.
Yeah, that really makes sense, and it's how it goes, right? That we should invest in stocks and how, not how we value it, but how other people might value it. So that makes sense. It's just how the perception of the market is right now. But since we're on the same topic, we also have this new report where the S&P is reporting a year-on-year earnings decline of negative 7.3%, which is the highest since COVID. So, in terms of valuations, again, since we since in my wealth management, there's like everything revolves around for valuing a company. It's always about earnings and how much dividends it pays out. So, with this much of declines in earnings for every stock in the S&P, should I mean, I know that you're bullish, but should we be a bit cautious, or what do you think could be going forward the trajectory of the market if this kind of decline is coming up in the earnings for the S&P?
Well, every trader and every investor needs to always be cautious, right? Because when the market is at the bottom, you're scared it's going to keep going lower. Almost nobody buys at the bottom and screaming, it's time to buy when the market is in the middle of falling. Everyone's going to be making fun of you. And yet everyone is also cautious when the market is rising. So there's never a good time to invest in the market. You just got to do it. Same thing with Bitcoin. Right? Either Bitcoin is crashing and everyone's making fun of you. Why would you buy Bitcoin? It's falling. Or it's gone up so much, it can't possibly keep going up. You're always buying into a speculative market concerned. It's actually the opposite in real estate, right? The real estate is like, oh my God, I can't believe you're selling your property. Don't you know this property is going to be worth more money in the future? Right? That seems to be like the only market that people believe that will always be rising, and yet can't believe whenever it actually falls. The opposite of what happens, what they think about the stock market. They say the same thing about gold. It's just not true. It's you have to almost get lucky for gold to rise. Usually, it just maintains its value, doesn't really go anywhere on a longer term basis, barely. So, there's always 20 reasons as to why you should not buy a particular stock or the stock market in general. And sometimes the market does go up a little too far, a little too fast. And if someone said at the end of 1999, or I think at the end of 1998, that NASDAQ has gone up too far, in that final year, NASDAQ went up an additional 25 to 30% in a single year, in that last year before it crashed. So, yes, there are concerns. Yes, stocks have gone up a lot since October of last year. We mostly gone straight up. There was one correction, and since that correction, we've also gone up quite a bit, actually. So there should be some concerns, but I personally am not too worried about it. And if the market does pull back, it is going to pull back to a decent level of support. And since I do like technical analysis, based on TA, I'm pretty bullish right now, especially using the MRI and our friend Matt, another member of the Financial Summit who attended, and his indicator. I mean, these are the two indicators I trust the most, and his and mine are both saying all systems go for the stock market to go higher. So I'm going to stick with it.
Now, so for context for other people, in Financial Summit, we share with all other members in the Financial Summit all the indicators and all the strategies that everyone in the family uses and how they can just adapt to their ideas or share their own. Anyway, so yes, coming back to what you were saying, Don, that actually is a very good point. That never is there a good time to enter the market. It's always how cautious you are and how bold you can be. That actually makes sense. In the same aspect, I actually have my own theory that, and please correct me if I'm wrong here, that since there was a lot of inflation like 1.5 years ago, uh, everything rose, including companies' revenues as well. So there were double-digit growths in revenues in every company, and now that inflation is cooling down, we can see the same effects on the revenues and growths as well. So in terms of uh, how should I say, the analysts' estimates, we are actually doing good, but where we are lacking is the whisper estimates, the estimates that's in the back of the head of the investors. So I don't think that that really is a big deal, because almost every other company is posting earnings in line with the analyst expectations. Am I like what do you think about this point, with inflation cooling down and revenues coming down as well with it?
Yeah, that makes sense as well. Inflation is not that bad for the stock market as long as it's moderate. Moderate inflation is fine. Companies get to raise prices. They may or may not raise salaries, and it could be pretty good for a company's bottom line if they properly manage it. So a company can manage inflation, especially if they have a product that people want, and they'll be fine. And now that inflation is coming down, the earnings estimates are going to be a little more moderate from analysts. Makes sense.
That's lovely. Okay, so now come let's we have talked about the past. Let's talk about the future a bit. So we have a big week coming up next week. Here we I'll just post it in the nest. Yeah. So next week we have the economic data for US. On Tuesday we have jobs numbers. Wednesday payrolls. Thursday jobless claims. Yeah. Oh, I'm sorry. Am I audible here? It's
Yeah,
I
you're
think
good.
something's wrong. Yeah, sorry. So yeah, and Friday unemployment rate. Could this be the big week that we were waiting for the pullback? I mean, a lot of market is actually waiting for it. I think 6 months been by the traders who've been on the sidelines waiting for a pullback. Could this be the catalyst for it finally?
Maybe. I think the real catalyst is going to come with the CPI numbers. If the CPI numbers are bad, I think people will pull back a little bit because they're going to be concerned that the Fed is going to raise rates once again. So I've been saying it on Spaces forever and ever and ever. Rising interest rates are not bad for stock markets. Rising interest rates are actually good for stock markets because it shows that the economy is doing okay and the Fed has the ability to raise the rate. But on a short-term basis, people have been conditioned to be scared and sell stocks if the Fed is going to potentially raise the rate. It is no different than during the 2016 election when you have Trump going up against Hillary. We all know Trump is way more of a capitalist than Hillary. Hillary is way closer to a communist, and Trump is pretty much a capitalist. And yet, every time Trump was leading in the polls, the stock market was crashing. And every time Hillary would take control of the polls, the stock market would be rallying. How does that make sense? If Trump is a businessman and Trump is a capitalist and Trump hates taxes because everyone's accusing Trump of cheating on taxes, Everyone knows he's going to lower taxes. He's going to make life good for corporations. And yet stocks were crashing whenever Trump would lead in the polls. That's because people were just conditioned to do something stupid, like sell the markets when it looked like Trump was going to win the election. And the night Trump won the election, the futures market overnight crashed like 5%, something ridiculous. Remember, the Dow was down over 1,000 points because Trump suddenly Trump won the election. And yet by morning, it recovered. And within days, people realized, wait a minute, it's like a light switch. Wait a minute. Why are we selling stocks when Trump is going to make business easier for all these companies? He's going to have a hard stance on China. He's going to create harder competition. He's going to make it harder for China to sell their goods here. People are going to have to buy more American, and that's more profits for the American companies in the American stock market. Like people were completely brain dead because they were conditioned to sell the market. Same thing here. If the inflation numbers come in a little bit hot, people are going to panic and sell the markets, even though that's not actually all that bad for the stock market. They've just been conditioned to do it because, if CPI comes in hot, then the Fed is going to raise rates. But right now, there is an 80-90% chance that the Fed is not going to raise the rate. And if the CPI is hot, now the odds are going to be 50-50 that the Fed is going to raise the rate. And somehow, I've been conditioned through some stupidity that because the Fed is going to raise the rate, that means that the stock market needs to crash. Right? When the reality is completely different. We've been witnessing the Fed raise rates like crazy over the last 9 months, and the stock market is on a tear. That in alone proves that a rising rate does not damage the stock market. And yet everyone's going to be scared of it come the week after when the CPI comes out.
That again is an eye opener actually for me as well. I have been one of those people who were bearish earlier, but these things actually make sense now. And as you've been saying it, screaming on top of your voices lately for the last 9 months, you've been saying this, that Fed actually is eyeing for 6% and maybe even higher, and it is here to stay, and it wouldn't affect the markets. And me included, there were a lot of people who were not in the same camp, but it is being evident that we were wrong, yes. And as to mention, the same news came today where the former interim assistant secretary of the Treasury of Financial Stability, Neil Kashkari, also said that the Fed is willing to keep interest rates rising and will be making it stay for longer. I think the same was pretty much said by Jerome Powell himself in the last meeting as well. But in terms of how you say that it wouldn't actually affect the markets, there was also a statement made by Powell that the real effects are yet to be felt. And following that particular statement, he also mentioned something about unemployment and how the whole government was actually eyeing for a move in unemployment, but they didn't actually had it yet, but there could be some. I mean, this is what I took from that statement. What do you think about unemployment there, Tone?
Yeah, it's going to be interesting. When I say that the higher interest rate does not affect the market, I mean specifically the stock market. Higher interest rate certainly affects the economic reality of private businesses and many private companies that are not public on the stock market. They could be struggling in a high interest rate environment. Now, I'm not saying a high interest rate environment is necessarily good for the economy. I'm just saying those investing in the stock market should not fear Powell's raising of the interest rate. But if you have a smaller company, this is a problem. It is a lot harder for you to finance debt. Your company could run into trouble. Even if you have like a single store, mom and pop shop, and suddenly, I don't know, you have a flood in your business, you need to go and borrow money and fix it so you can get back to work, you may have a problem. This 6% interest rate is going to be a big deal for you. And it could be a difference between a surviving business and not. I mean, I've had to deal with this issue when I had a physical business. I still have a physical business, but back in the day, I had to finance that business. And there was an incident where my partner, who's not as well versed, he kind of got scammed for like almost $1,000 on something where like someone called and like pretended like they spoofed caller ID. And it's like those IRS calls, you know, like they're calling in that you owe taxes, and if you pay them like $1,000, they'll forget about your $10,000 debt. It wasn't like that. It was either electricity bill or something like that. It couldn't have been electricity bill because the limit too big. It was some kind of, you know, government thing. I forgot what it was because this was like 5-6 years ago. And our business has been around for like 9 months, almost a year, or it might have been in its second year. And like when he got scammed for like $1,500 and I wasn't around, I was traveling. I'm like, what the hell are you doing? How do you fall for this? And that alone created a big problem. That almost overdrew our bank account, had to be financed on credit cards, and that $500 hole, because the business was literally running paycheck to paycheck, every $20, $30 mattered. And that random $1,000 expense literally created like a giant problem that took a year to get out of it. So that's what I mean. Because back then I wasn't just going to throw money at the problem. I'm like, you know what? Your problem. Let's see how you deal with it. And I'm like, holy shit, there's no way that this $1,000 can completely take down a small mom and pop shop. But in reality, they can. It was a great like thought experiment, I guess. It taught me a lot of lessons. The biggest lesson I took away from it is I will never invest in a physical mom and pop shop. That was my biggest lesson. At least the conferences are a little bit different. But yeah. So I learned the lesson not to open a physical storefront. And yeah, it matters. And I think that's likely what Pal means. And Joe Calasari, who was on this space last time during the week, he mentioned that a lot of companies, their junk bonds and their debt market of these companies, they're going to run into a problem when they have to overhaul the debt. It's no different than if you did take out a loan for your business and you've been paying, 3-4%, and it's time for you to pay the principal back, but you just need to refinance. Like, you know what? I'm not ready to pay back that principal. I just got to refinance this thing because my business is doing better, but it's not great yet. And now you refinance it, but the interest rate is 3 times higher. And now you may not be able to get out of that hole again. So that's what he means by that. Unemployment can still rise. This high interest rate could create a problem for the US economy and the world in general. But this is helping the big companies, the Apples, the Amazons, the Nvidias. They don't have a problem borrowing money. They don't even need to borrow money. The Microsofts, the big boys, the companies that are driving the stock market, they are benefiting from smaller companies that's their competition potentially going out of business because they may not be able to borrow money like they did before. So this could benefit the stock market, but this could very well hurt the US economy.
I'm really sorry for the experience, first of all, and something I can actually relate with because in India it happens every second day, and I myself own a physical business there, and these kind of scams are pretty normal there. But yeah, that really makes sense for you. That actually makes me bullish as well, and I think that we spoke about this on last space as well, where we are bullish on mega caps and how we keep pointing about these 7 companies and these mega caps are driving everything. But these mega caps are actually so much cash rich that this interest rate hike wouldn't affect them at all, but will impact so much on these small companies, the small caps, the micro caps, that they might go out of business, and they can be a great target for acquiring. And that's how I'm a bit bullish on mega caps actually. But yeah, that really makes sense for your take on it. And speaking of apples and
Oh,
nvidias.
let me make one more comment because I'm continuing to look through the pinned tweets. This negative 7.3% year-on-year earnings. We really need like to get away from this COVID year, right? So during COVID, everything went insane. And then the year after COVID, like the 2021 and then the 2022, the numbers were also insane because everyone's using year-on-year numbers. And 2022 was a good year. We really need like another year or two to completely get out of the lockdown time, and we need a full year of robust, like a normally functioning economy, and then we can start looking at these year-over-year numbers again. I mean, these year-over-year numbers in that chart are kind of silly because last year was also a really like weird year because those numbers are very skewed because of what happened the year before with the lockdown. So I'm not surprised that these numbers are so low, but I think eventually it will kind of normalize.
I actually agree with you here, Don, because I myself, I mean, I'm in again, valuations mostly here in the universities is all about DCFs and everything, and there we see quarterly and annual data back to back. And these past 4 or 5 years consistently have been a roller coaster because first we had lockdowns, and then we saw everything open up and the businesses were doing great again, and then again this inflation where we saw some businesses do great, some do pathetic. Then this interest rate hike. So I would say that a stable trajectory for any business doing a DCF on it is really tough, and we can't really. I mean, I being a rookie in this, don't really see how we can perform a valuation on this with this kind of price action going forward. I mean, having that kind of past. So I really agree with that point. On thank
Yeah,
you.
we're finishing up an environment where the interest rate has gone up the fastest in history, and that environment's about to end. The Fed has a ceiling. As much as the Fed hates the Treasury, I think the ceiling is 6%. He may push it to 6.5%, but that is grossly dangerous. So I think 6 is the ceiling, and after that, things will normalize again.
Just out of curiosity, Don, do you think this ceiling could also be a floor coming forward, or do you think that we could see some downfall in that particular percentage, because a lot of Wall Street professionals eyeing do want that to go down for the next leg up. Do you think that's going to be happening?
No, there is no floor. The reason why there's no floor is because the next administration, unless the next administration is Trump or someone that really, really likes Jerome Powell will be replaced. So, and if whichever next administration is, they're going to want a Fed chair that's going to lower the interest rate. A high interest rate is very, very bad for the government. The government doesn't want a high interest rate. So whoever the next chair is of the Federal Reserve, if it's Janet Yellen, for example, or even a Nouriel Roubini, that interest rate can go to zero, and it can even go negative. If Nouriel Roubini got in there, he would probably lower that rate to negative 1%. I've heard him say it in a speech, though that speech was pre-COVID, I think. But he wanted the Fed to create a negative interest rate. I don't know what his views are right now, but Nouriel Roubini was one of the guys screaming that the interest rate needs to be negative and you need to penalize people with money in the bank that aren't spending it. That was Nouriel Roubini's solution to the current financial economic crisis, which to me is insane. Of all the people that really understands the problem in modern day economy, Nouriel Roubini is one of the best. The problem is his solutions are batshit crazy, in my view, and I'm happy to debate him on those solutions. But he does an incredible job explaining what the problems are. It's just that his solutions are even more insane. And so if Janet Yellen was to become the Federal Reserve chief once again, that interest rate will crash the fastest in history. Now, she may need a reason to crash that interest rate, and I don't know how they're going to generate a reason. Maybe aliens? I don't know. Whatever the reason is, the government will come up with something. They'll come up with a reason as to why the Fed needs to lower that interest rate. but they also need a Fed chair that's willing to do it. So there is no floor because of the mounting national debt. If there was no national debt, then the government would not be in a dire need to, sustain its existence. And then there probably would be a realistic floor of about 2 to 3%. Now, there's no reason why the interest rate should have ever gone below 2%, ever. Even in the dot-com era, which I'm not sure if it did go below 2. No, it did go below 2. And I got to double check that. I got to fact check myself. It obviously did in 2008. It went below 2% and it stayed there for like 6 years, which is also insane. Money shouldn't be free. Anyone should be able to pay 2 to 3% on the money that they borrow. This should not be a problem. If you have a problem paying a 3% interest rate, you should not be borrowing money at all. You're too responsible to borrow money. So that's kind of my view on it. Right now, there is no floor because the U.S. has such a mounting national debt, and the lower the interest rate, the longer the United States will survive as an entity without a default.
It's kind of funny because how we were talking about stability in markets in the last 4 or 5 years, we've seen just roller coasters going up and down. And thing is, the next year is actually election year, and yes, we can see the floor going negative as well. That's a point that is to be kept in mind. Thank you so much for lighting that up. Also, Matt joined us. Thank you for coming here. I'm not sure if you're gonna come up on the space. Let me know if you want to. Also, anybody else in this? Oh, there you are. Thank you. Uh, so yeah, we actually spoke about Bitcoin a little bit, but if you do want to put lights on it again, I would love to. But since we're on this inflation and interest rate topic, uh, I would love to have some thoughts about this BoJ situation that just came up about the bond yields. If Tone, Matt, Fish, anybody wants to put lights on how they have anticipated this move, a hawkish move apparently for the Bank of Japan, from the Bank of Japan. Sorry.
Yeah, can you? Is that one of the tweets that tells me the details? I have not paid too much attention to the Bank of Japan lately for some
I
reason.
actually myself was driving while I read about it, but I haven't posted anything about it yet. But I will find and tweet in 2 or 3 minutes. Till then, we can just talk about something else. So yeah, Matt, we saw a great what this is. How should I put it? Another bust in shitcoins. If you've seen the CRV, we have discussed about it a bit. But would you like to talk about something on it while I dig about the BOJ?
I mean, you'll have to get more specific. Isn't busting shitcoins in the bear
Yeah.
market? That's a
So
weekly, monthly event. But I know what you mean. I was catching up, coming back from the weekend and seeing the latest shitstorm. You're not wrong. Bank of Japan, boy, that is some three-dimensional chess that we need an international expert to really make that make sense. It's so, from the limited amount of that I know, it just seems like, okay, fine. The government of Japan is the buyer of first and last resort of their own bonds, and they basically moved the price higher in which they will buy. I mean, I don't. It
yeah,
seems
so
like they're
from
just kind of.
what I've
Go
read,
ahead.
the specifics is like they used to, like, obviously to flush money in their own economy. They used to buy bonds at 0.5% fixed, and apparently the whole world used to think that Bank of Japan, oh sorry, Japan is one economy that is inflation proof. But for the first time, they've actually seen inflation, and they are raising their yield curves by buying more. Offering 1% now for the fixed rate operations. I've almost made this tweet. I'll put this out. So, yeah, do you think that, I mean, obviously this makes sense for Japan, but in terms of purchase power parity, because we deal a lot with Japan, like the whole world does. I mean, obviously the Toyotas ain't coming from China. So, do you think, in terms of purchase power parity and the interest rates for the US going up, do you think this could be good or bad for the US? In your opinion, I know that this is too soon to just blow things on you, but Just curious.
I mean, we're so interconnected and interwoven these days in the world economy. The U.S. does not benefit from a weak and deteriorating Japanese market. We want to see, you want to see your trading partners doing well. You want to see strength in the economies of scale that you have long-standing decades of relationships and do business with. So no, we don't benefit from Japan having some sort of unexpected crisis in their bond market. We don't benefit from China slipping out of steady growth into it could be a mild to major recession. We don't benefit from Europe having nasty inflation, whether you're looking at the UK or the Eurozone. We do business with the world. We want to see everyone else having vibrant economies because we make money when they make money, and vice versa.
Hey guys, yeah, I just read it and I'm listening to it now. This is super interesting.
Ban had been maintained, but
Let me see if I can speed this up.
Changed because they have abandoned the unlimited purchase at the 0.5% rather than they're going to be purchasing at around like 1%.
Okay, so I just read it. So look, it's exactly what I just said, and I didn't even know this news happened. Remember what I said 10 minutes ago? It makes no sense to have a 0% bond. If you can't like borrow money at 1 or 2%, like you shouldn't be borrowing money. Now, Japan is dealing with a little bit of an inflation problem, and keeping that interest rate at 0 is insane. Who the hell is buying Japanese bonds and earning 0% on them other than the Japanese government? And what they're trying to do now, in my opinion, is, you know what? Maybe if we offer some kind of an interest rate, even 1 or 2%, maybe someone other than ourselves are going to actually buy this bond and maybe invest in Japan. Now, I still think that's a horrible investment. I think every government bond right now is a horrible investment, with the exception of maybe El Salvador's volcano bonds, because they actually have a real plan to for the government to make money. But that's it. Outside of that, I don't know of any other government whose bonds should even be considered for investment. And it was about time. I mean, Japan can't keep their rate at 0 forever, and they were heading in that direction. And now that inflation is rising, they had to do something because there's nothing else they can do. If what you've been doing has not really been working for 3 decades now, they just changed it. And because it's Japan, they're not like the Fed. They're not going to tell you what they're going to do 3 years from now. They just went ahead and did it. And that's what it should be. Like, it's the Fed that tries to tell you what they're going to do 3 years from now, and then they're always wrong. And then they still do crazy stuff like raise interest rates 75 basis points in the blink of an eye. And Japan they didn't warn you. They just went ahead and did it. It's not going to make any material difference whatsoever. But if that interest rate starts to creep up to 2%, where it was 0 just last month, now there could be changes, and we'll see if these changes are for the better. It's hard to say because Japan has a huge debt hole, and the only thing that is actually saving Japan from going into a crisis like America will is Japan is a small country. It's a very homogeneous country. It's not a melting pot. It's Japanese. If your kids are half Japanese, they're not even considered Japanese. And they listen to their government. They're, it's not a country with a million guns. It's not a country with crazy huge protests. The country will be fine. It's one of the favorite countries for tourists to go, which is why it was crazy for them to lock down and not allow tourists in for so long. But the population also doesn't care. It's like I don't know. It's a very family culture where your family will help you if you run into trouble, and they're a pretty honest society. They're not as cutthroat as some of the Western societies are. It's a very, very different culture that would allow them to weather a lot of these storms. But as far as, their debt to GDP, it's bad. It's not going to get any better. It's only going to get worse. And changing the interest rate from 0 to 1% is not going to make any material difference. Now, in the United States, changing the interest rate from 0.5% to 6% is going to make an enormous difference. And people still have no idea what's coming.
Yeah, it's
I
just.
think we lost our host, so I guess I'll take over for now. Matt, go ahead and add anything.
Yeah, I think it's just one more example of these different countries refusing to let recessions happen. Recessions are persona non grata and banned, and we can't let this healthy phenomenon hit our markets because XYZ reason. We all know what your various countries did in 2020 to make sure that you didn't feel the pain. And this is just offshoots of that, whether it's China turning their money printers back on and debasing their currency, whether it's Japan's government literally buying their own debt in bulk and refusing to let yields cross this percent or that percent. It's all the same fugazi. It's all the same monetary tricks. Is refusing to let market effects take out the unprofitable companies, let industry die, and the strong ones survive, and capitalism flourish. You keep your finger on the problem is the longer you keep your finger holding this down, the worse the downside will be later. You're prolonging what is normally a healthy reaction, but you're just setting yourself up for a larger catastrophe in the future.
I hope I'm audible now. I'm sorry, something got missed there. And apparently, I missed the most interesting part of the conversation tonight. But anyway, I have a backup.
That's why these are now going up on YouTube.
Yes, that's what I'm going to say. I can always come back on YouTube tomorrow and get the highlights. Thank you. Thanking the Fin Summit team for that. Well, anyway.
Yeah, guys, these spaces are going to be posted on the Financial Summit YouTube channel. So go ahead and subscribe if you haven't. We're going to be cross-posting these spaces and eventually additional trading, investing content on the Financial Summit YouTube channel.
I guess the Bank of Japan topic is done. I'll catch up on it tomorrow. Coming back to maybe crypto for a few minutes before we go over on commodities. Tone, I'm finding this and pinning it in the tweets nest above. We have seen that a lot of stable coins market share is moving towards only USDT, and this trend is continuing over the years. I've just posted the chart in the nest. Over the past 2 years, we've seen that almost the USDT gained almost 20% share. Do you think this is good? I mean, I personally don't even like the stablecoin facade because they just print that out of thin air and move the market sometimes. At least that's my theory. What do you think on it? If you can put some light. And everything going to just one stable coin, is that also something healthy in the crypto market?
Yeah, these are good questions. I don't know. I can make the argument in both directions. And it's a different risk profile. We know that the US government has a monopoly on the US dollar, and they don't want competition in the US dollar. So when you know that the US government does not want competition in the US dollar, would you rather be the company that's trying to play nice with the government, like USDC, knowing that they are creating a product that competes with the US dollar? Or would you rather hold that stable coin that is at odds with the US government and the US dollar? And that's what Tether is. In addition, Tether has the longevity, Tether has the recognized name, Tether has been around for a while, and as great as evidence as Bitfinex has tried to put out there, trying to portray Tether as an outright scam, I believe those efforts have actually failed. And this is coming from someone whose name is in the court case of the AIG, because there was an email on file as evidence. I'm sure it was evidence of many things, but in that email, the head lawyer for Tether is calling me a colossal douche. And that's part of like the legal record, which is hilarious. And so I've gone back and forth on Tether, but I'm now at a point where I'm not scared of Tether. Obviously, I'm not holding any Tether. I don't have much exposure to it. But if I personally was going to have exposure to a stable coin for a short-ish amount of time, it would absolutely be Tether. To me, there is no second best stable coin. And we're getting close to a level where if the US government shows up and arrests the Tether people and confiscates the wealth backing the Tether token, everyone that's using Tether can just shrug it off and say, oh, well, we still think Tether is $1. It's useful for us for Tether to be $1, and we're going to treat it as Tether being $1. And then there's nothing the US government will be able to do about it. Now, that would be kind of crazy, but I can see it happening, where the world just says, well, it's inconvenient if Tether just went to zero, so let's pretend it's $1. And that can go on another decade before, but at that point, the people of Tether might actually start printing Tether out of thin air, because if it's not backed at all, then who cares? And then it will eventually collapse. But yeah, I think I personally trust Tether more than USDC, because I know the people behind USDC, and these people are not freedom people. These are, people that love the traditional finance system, and they don't want Bitcoin. They're like, it's a Brian Armstrong type of person. They're just in it for themselves and to make money. They're not. There isn't a single percentage of Jeremy Allaire, who I believe is the USDC guy with Circle.
Yeah, he's the CEO. Yeah, he's the CEO.
I remember Jeremy. On my blog from 2015, I remember listening to a keynote speech by Jeremy Allaire, and my walkaway is, oh my God, this guy is like, he doesn't care about freedom. He doesn't care about Bitcoin. He literally said in his speech that very soon the Federal Reserve or Treasury, I forget which of these government agencies, and I know Fed is not technically a government agency, but they kind of are. He said that the government needs to have a say in Bitcoin's direction. And he said this back in 2015. So I never trusted Jeremy Allaire, and nothing he does with USDC it's not done to help people with freedom and banking and letting people use Bitcoin. It has nothing to do with that. But the Tether people, they actually kind of care about Bitcoin, and they're not there to help the government. And they are there with a product that helps people that want to use Bitcoin and want the government out of their life. But that's not what the Circle people are. That's not what the USDC people are. And whatever Binance has in mind, it's not that either, because Binance is only, like, CZ is only in it for himself. And that's why he created unlicensed security to create that company. It's like another Sam Bankman-Fried. They're both not very good people. So yeah, I'm going to stick with Tether.
Yeah, please, Matt, please. What's your take?
Yeah, I think the world didn't realize how risky USDC is until the mini banking crisis of this year. So if we remember back in the spring, we had first Silvergate, then Silicon Valley Bank, then Signature. But what we've already forgotten is there was a weekend where you literally couldn't trade in and out of USDC on Coinbase and other exchanges, and it literally lost its peg. I think it went down to 89 cents for a little bit. Why? Because Jeremy Allaire and the Circle executives are not nearly as smart as the world thought, and they put so much of their assets in banks that had systemic risk, that banks literally collapsed. And fortunately, they were able to get their money and move their assets, but they had massive risk to a handful of banks that, surprise, surprise, were not managing their assets and their liabilities nearly as smart as the world thought. So everyone kept thinking like, oh well, you got to trust USDC Circle's product over Tether because they're U.S. domiciled and they have access to the U.S. banking system and they're above board and you can their assets have transparency. The problem is like no one even considered that like, well, yeah, but when you're that close to the U.S. government, as soon as they don't like what you're doing, they can reach out and touch you so easily. If this U.S. administration or the next all of a sudden decides, you're right, you know what, we don't like dollar competition. To Tone's point, we don't really like stable coins. Doesn't really matter what their justification. They can get in their black SUVs and be at Circle's doorstep within that afternoon and tell Jeremy Allaire, shut it down, shut it all down, and or we'll place you under arrest, or maybe both. Why not? They can't do that to Tether. No matter what of our opinions of Tether, they are decentralized and international enough that actually it's literally safer for international players to hold their wealth in Tether over USDC. USDC, their future looks more and more like they want to marry themselves to the U.S. government. They want to stay in good graces with the U.S. because if they fall out of favor, they're screwed. They're screwed. They are within a half hour of SDNY. Like they're with their headquarters. Like they're Tether. They're international. USDC. They are in trouble if they fall out of favor with this administration or the next.
I will play a little bit of. I'm going to counter that a little bit. So I didn't mention any of the banking stuff because all of this could have also happened to Tether, and in fact, Circle and USDC probably has a lot more, I guess, clarity and openness as to what is being used to back USDC. But people also have to remember USDC is a fraction of Tether. And for many reasons, Tether is being private about what they're using to back Tether, and they can't hold 20, 30, 40 billion dollars in the bank in cash. That cash would be gone super quick. They're mostly holding U.S. treasuries as well. And I don't know how they're holding them. They're big enough to maybe be holding these treasuries directly, and they may be holding them directly through other companies where the government can't just show up and confiscate that stuff. I don't know. So just because Circle chose poorly with their with the banks and where they're holding some of their money, I don't really want to hold that against them. That could have happened to Tether as well. But once again, there is no really good bank. The biggest banks are actually in China. I think China has the biggest bank in the world, and it's not. So it's really hard. Like, I don't know where to hold the money, and that's what I mean. The difference between Tether and USDC is that if something did happen to the underlying wealth of Tether, I can envision Tether remaining at $1. But if something happened to the underlying wealth of USDC, it's done. People are going to exit that shit so quick. And that's because Tether has almost become too big to fail until it eventually fails. It doesn't mean someone's going to bail it out, but people can just say, okay, it's kind of like with the US dollar. When the US dollar went off the gold standard, no one sold off the dollar. Yes, gold went up in price right away, but that could have been because of, gold, and gold was no longer illegal. And people finally had the opportunity to buy gold because gold was literally illegal before. So they could have gone up for other reasons, but it's not like the world gave up the dollar just because it lost its backing. And it's very, very possible Tether will keep its backing. Tether will keep its stable price, even if the backing is gone, because it's just become too useful for people around the world. until, eventually people will realize that Bitcoin is not as volatile as they think, or Bitcoin becomes less volatile, as we discussed very early in this program, for those of you that joined a little bit late. And as Bitcoin's volatility comes down, there will not be a need for Tether, because eventually the US dollar will be more volatile than Bitcoin itself, maybe a decade from now, maybe two at the worst, but that day is coming. And when the US dollar is more volatile than Bitcoin, and holding the US dollar is riskier than holding Bitcoin, there will be no Tether, because there just won't be a need for it. Bitcoin will be that global currency and the one that everyone runs to when other assets crash in value. And hopefully it'll last for 100 years that way before something better comes along.
So interestingly, the team actually found a great tweet, a great news about this, how the U.S. House Financial Services Committee is actually amending a bill against this stable coin situation. And it's not just in the U.S., the U.K. and Europe as well are doing it. The tweet is in the nest, while speakers can have a look at it. There's something I noticed a couple of days ago. I was going through liquidity of the exchanges, and I saw how almost 25 to 30%, and in some exchanges even more than that, uh, of the portfolios of people on the exchanges is actually kept in stable coins, maybe just because they're on the sidelines, that Bitcoin uh, have a dip or something, or maybe they're just waiting for opportunity. I don't know. uh, in my opinion, I just think that liquidity enough itself is so much that if such news that we can see in the nest, that goes against the stable coins, and people just jump to convert the stable coins into Bitcoin or maybe something else, this can actually pump up Bitcoin and other coins so quick that it's beyond my imagination. I mean, the bill actually says that how uh, the federal government can actually take custody and interfere in the companies that actually owns these stable coins in terms of, and I quote, emergency situations. So what's your take on this, Tone, about the liquidity the exchanges also have, and about these bills against the stable coins itself?
I don't have much of a comment on the bills, but yeah, exchanges are going to be left holding the bag. And what bag would you rather hold? You'd rather hold the bag of Tether, not the bag of, say, Binance's version of Tether, which you saw from that dominance or that supply goes from 12% down to 3%, which is insane, because no one wants that. No one wants that. Everyone thinks that the U.S. government is going to shut down Binance, and when that happens, their Tether equivalent is going to zero. Nobody wants to be holding that bag because your risk is so high. Imagine you're an exchange and you're holding all of your stable coins in Binance, and there's a high probability Binance is going to disappear. Like, you'd rather be holding it in Tether, because if Tether disappears, everybody goes down. Every exchange goes down, right? You're not going to be sued to shit because everybody will. Like the whole industry, like every exchange is going to be a disaster. So yeah, you're going to be in the middle of the herd. You're not going to be that buffalo that strays away from the pack. So this makes complete sense as to why it will all go back to Tether. And this is the same thing about shitcoins versus Bitcoin. Eventually a single one will be dominating.
In just my conspiracy theory, don't you, yeah, please, Matt. Matt,
This is what I was talking about with USDC's counterparty risk. So, and why, in my personal opinion, you have seen their market cap, USDC Circle's market cap, go down since spring, and Tether stay steady or even rise. Because I think people all around the world are realizing that Circle USDC is only as safe as the U.S. government says it is. So if this bill passes and it has some egregious language in it, or maybe the next bill that they push for passes and it lists half a dozen countries that Circle USDC is not allowed to provide services for. Like, you can imagine all sorts of egregious requirements placed on Circle USDC simply because they're a U.S. public company. Technically, they're private right now, but you know what I mean. They are regulated by the U.S. government, and they have to play nice, or else their future is short. So that's the problem. That's the issue. Like, maybe you get some favorable legislation in the future, but if you don't, like, you are risking so much by holding USDC. If you're just in some unfavorable jurisdiction or country or region that this administration or the next doesn't really like anymore, all of a sudden they tell Circle that country is no longer allowed to be banked by your services and your product. Like, that's unacceptable for a lot of, like, that is just unacceptable way to live, and who would want to take that risk? So I mean, I don't think it's that complicated. People are realizing and waking up that USDC has this counterparty risk that Tether doesn't.
I mean, yeah, please, Tony, you were saying something.
No, go ahead.
I'm just saying that, call me a conspiracy theorist, but I just think that, as discussed before, as you mentioned, Tom, that the, the government actually sees these stable coins as a competition, and they can't see them as a competition going forward. This could just be a first step for going against them and somehow just ending this charade once and for all. Because as we see in this bill, both parties, the Democrats and Republicans, are together in this decision, making this bill that they can freely interfere in these companies, because the corporate laws were protecting them, apparently, but now they can't after this bill. So I just think that this could just be the end of stablecoins, the beginning of the end, and in some way, I can be happily named a conspiracist here. But yeah, that's how I think is it. Anyway, any other takes on Bitcoin from anybody else? And if not, then we can go again on traditional finance from here on. Maybe Bernoli, Matt, anybody else on what they think on Bitcoin now? Because apparently we have seen the tightest range in a long time of maybe $400 for almost a week. What do you think is coming forward for Bitcoin here?
Yeah, I loved that chart you posted with the volatility, and I think you're the only one I've seen point out that really short capitulation in the hash rate. I thought that was really interesting. I was watching it also, but I think it does. I think, like I replied to that tweet, it does kind of mirror around December of 2019, but that puts us pretty much right in the same distance time frame wise from the halving. Um, I kind of feel like Bitcoin is doing exactly what it should do, and probably the longer it consolidates, the faster the move will be. But and we could have some serious shakeouts to the downside before the halving, but it doesn't that wouldn't concern me either if that happens.
See, I get a lot of I feel a lot of similarities from this previous bear market to 2015's. I shared it up in the nest, but I always have to keep looking back, and I'm flabbergasted that this bear market lasted exactly the same number of days as the 2015 one did way back when. Literally 270, call it 272 to the day before we finally broke out of 25K and put that behind us. So, I mean, if we think of it in that terms, then 2015's consolidation on its next range, it lasted pretty long too. People were growing really bored, and we're like, okay, we finally got out of $500, $600, but when are we going to move higher? And it took a couple hundred days as well. And anyway, it's up in the nest. But I think people are always just waiting for the next pump. And quite frankly, like, this is normal consolidation, and like, don't overthink this.
Totally agree. It does seem more similar to that prior cycle. And we did it, and that's probably where I made my biggest mistake in Bitcoin ever, which was I got bored and stopped paying attention, uh, and was moving and all sorts of things, and I didn't buy it up like I should have. But lesson learned. And yeah, we did have kind of a weird crash. I don't know if there was a news event that was related to or what, and it depended on exchanges a lot back then, how far down it went. I think it was in the range between like 180 and even over 200 on some exchanges. But that's why that kind of crazy behavior wouldn't surprise me. But also, like pointed out earlier, the volatility really is decreasing over time.
I would disagree with you, Bernardi, here. I mean, once you're a Bitcoiner, your biggest mistake can never be something else, but always is that why didn't I buy more? I mean, that always happens to a Bitcoiner. On a funny note, let's end this Bitcoin. Let's end cryptocurrencies and come back to commodities. Yeah, Tone, you were saying something.
You
Sorry.
know, real quick, on a completely side note, I saw a question that someone asked by clicking the reply to the tweet. What do you think about the writers and SAG, AFTRA, actors strike? Will it affect the economy? I think it will affect the economy in a great way. I mean, unfortunately, Hollywood has become complete woke culture, and they continue to push that onto the people. So the longer the actors stay on strike and the longer they don't make movies, the smarter people will get and the better society will get and the more capitalistic society will get, instead of pushing their Marxist views and socialist views through all these movies and all these actors, because that's all most of them are. So I am happy that there's a strike, and hopefully they will all be replaced by people that actually want to do that job and not just doing it for the money.
Apologies, I couldn't see that earlier. Should have, but yeah, that really makes sense. Thank you. Okay, coming back to commodities now. Tone, you mentioned earlier in the discussion that how gold you think never really does anything in the long term. But I also remember earlier you mentioned that you were a bit bullish on gold this time. So what is different this time? Are you still bullish, or that thesis is different now?
Oh, I'm definitely bullish on gold right now because gold has literally done nothing since the 2011 high. Gold went up a lot. It made a top in 2011, and it's now been 12 years where gold has done absolutely nothing and did nothing but fall. So it's just gold's time to go up to approximately 3,000, maybe as high as 5, but my guess is around 3 before coming back down to 2,000. So once every 8 to 9 years, I am bullish on gold. Precious metals is the opposite of what the gold promoters are, like the Peter Schiffs of the world, who are bullish on gold all the time. I tend to be only bullish for a 2 to 3 year period every decade, and I think it's that time.
Yeah, that makes sense. Thank you. But there was also a bit of controversy about BRICS and how they were adding gold to they were backing their currencies with gold, the BRICS. Just a brief take on it. Do you think that can be a catalyst for making it bullish this time, or it could just be the technicals that you were saying?
So for me, it's all technical because I am still skeptical on the BRICS actually creating a gold-backed currency. Now, I do go back and forth on this. I can make the argument why this is crazy and why it's not going to happen, and it's just window dressing, and they're just talking about creating a gold-backed currency because none of these countries actually want to give up control of their own currencies. They want to convince all these other countries to let them use their own currency for it. Like Russia wants India to accept Russian rubles, and India wants Russia to accept Indian rupees. Though I think Russia recently said that they're not going to accept Indian rupees. So they have a little bit of an issue there. Hopefully, they will use Bitcoin. I think they continue to use the U.S. dollar. They're just going to cut out the SWIFT. They're just going to hold the U.S. dollars in reserves. Maybe they'll be trading U.S. bonds around for a while until those bonds become too risky. Now, the only really good explanation that I heard, as to why these countries would be willing to give up control and in fact create a gold-backed currency is if they all want to unite and destroy the United States and its control of the world through the US dollar. That is the only, to me, that's the only really logical explanation as to why they would be willing to do it. So if there is a secret meeting between the BRICS, and it would have to be a larger meeting, so it would have to be, the BRICS would have to be extended to like maybe 10 to 15 countries. You need Saudi Arabia, you need Iran, you need several Latin American countries. Argentina is a bit of a basket case, but you want to try and get, Venezuela on board. You want to get Colombia on board. You want to try to get Chile on board. Though that's going to be incredibly hard. They're pretty, in line with the U.S. It would be amazing if you had Mexico on board and Indonesia on board. Like these are the countries. These are the countries to focus on. Turkey is a little too far away from, cutting their ties with the West. But Indonesia and Mexico should absolutely be countries they're discussing it with. And then they need to have a secret meeting. And that meeting would go like this. Are we ready to destroy the US dollar? Because that is a hard question. The ramifications of the US dollar going into, say, hyperinflation are going to be massive throughout the world. And, a country like Indonesia, even a country like Brazil, may not want the ramifications of a US dollar collapse. And creating this BRICS gold-backed currency can potentially take down the US dollar because suddenly there won't be a need for US dollars anymore around the world. And I don't think these countries want that right now. They don't. They don't want to be the cause of the US downfall. They would rather it be, the BLM riots be the cause of the US downfall, right? Like they want it to be completely within the United States. They want the United States to fall from within. I don't think these countries really want to give the U.S. a reason to fight back. I don't think they want to be known as the country blamed for the downfall of the U.S. I think they're smart. I think a lot of their leaders are very smart. And they would rather just sit back and watch the United States destroy itself, which is why I keep going back and forth. Will this gold brick currency be created? Right now, I'm slightly leaning towards it's a bit of a dream. But let's see what happens next year. Let's see what the talk's like. It's definitely not happening next year. If anything, it's the year after.
That actually is a beautiful take. Thank you so much for that great insight on that. So one thing's for clear, we're not seeing the catalyst from BRICS as for gold, but technicals actually are bullish. So for long term, that's the take from FinSummit. Okay, so apparently the last topic for today we have coming up shortly is oil. So if anybody has something else from the audience, you can just always let us know in the comments or just come up on the stage as well. So yeah, if there's not, we're going on oil now. So what's your take on oil this time, Tone? For this week maybe, or maybe in the long term as well?
Sorry, Amma, can you repeat that?
Oil. Since we're on the commodities, I only have oil now. Yeah.
Oh man. All right. This is going to be super quick. Oil is so close to a yearly high. Oil has gone up, 4 or 5 weeks in a row? I'm going to open up the chart right now. Oil has gone up, well, not counting the week where they put in a hammer candle. Oil has gone up significantly for 4 weeks in a row. And not including last week's candle, because we don't know the data for last week's candle. The first 3 candles of this bull run in oil corresponded to the Biden administration not touching the Strategic Petroleum Reserve. They have not touched it for 3 weeks in a row. And last week, I am confident they did not touch the Strategic Petroleum Reserve because last week was the biggest candle of that 4-week stretch. But the data for last week's use of the Strategic Petroleum Reserve will not be out until Wednesday night. So we wait and see. But I am super confident that they did not deplete a strategic petroleum reserve, and hence oil went up 5% last week. And I don't know how long the Biden administration can hold off not touching the petroleum reserve if the price of oil is going to be rising 5% per week. That's insane. That's going to cause massive inflation in the U.S. The Biden administration stopped touching the petroleum reserve because they need to save as much as they can for next year's election year. But they may not even get the chance. So I am very confident that the Strategic Petroleum Reserve was not touched. Now, if they did deplete a Strategic Petroleum Reserve last week and the price of oil still went up 5%, we're in trouble. We're in a lot of trouble. So we wait and see on the numbers, but oil markets are fascinating to me right now.